Good afternoon traders, it's Simon at Kairos Capital Markets with the weekly review of Aussie dollar, pound yen and euro dollar. So this week I was expecting a dollar pullback to show some weakness in the market. We didn't get the pullback I expected, but when you look at the weekly chart here, you can see some nice tweezers forming at the top of the neckline there. So I definitely feel we should have a move now this week coming down. And if you look on the lower time frames, you'll start to see some patterns forming. So on the DXY itself, you can see there's some form of wedge forming here. Depends how you draw your wedge patterns as well, but that's immaterial as such. You can see there's a pattern forming. We've also got RSI did come to almost 100 and started dropping back down again, which is nice to see as well. And you've got RSI divergence where the two peaks here are obviously going are lower high there, and you've got higher high there, but it's getting squeezed. So when we come down to the 4-hour chart, I've drawn this kind of open, like really wide wedge here, but you can easily as well just quite literally just draw your wedge from here to here like that, and you still get the pattern itself. So no matter how you draw your wedges, there is definitely a rising wedge here, which is a bearish pattern. And as it's been going on for the last couple of weeks or so now, actually about 3 weeks, or even some start of it was actually from here for the end of May. So you got a lot more than that coming up as well. But as it's starting up to show you some deceleration and some reversal patterns, once we break out of the wedge to the downside, break and retest, that would be a beautiful idea to start shorting more of the dollar. Again, on the MACD divergence there, you got bearish MACD divergence, where if I zoom up there for you, you got lower highs forming with higher highs on the pattern, so that's nice to see that happen as well. So when we now look for on the pair side of things, this is what we got on Aussie dollar. So again, I did expect it to move back up a bit more than what it has done. It didn't do that, but the same pattern is forming on the lower time frames. The weekly, as it stands right now, is putting, you could say tweezers, but definitely too low test there, no problem at all. My concern would be if you was to take this long, 75 is the key level. You just zoom out, you can see how key this level is. You've got all the way around here, lots of touches. Pop down to the daily chart here, you can see 75 again there. Clean touches 2, 3, 4, 5, there's 6, 7, 8, 9. You got 10 touches, 11, 12. This is a strong key level there. Also, the daily 50 is coming down, and bear in mind we tested day 50 once and twice here. You could say not really this one here, not the best test in the world, but it's the area there. So expect the daily 50 and 75 to cause huge issues with yourself if you are going long with this pair. So now we've come down to the intraday charts for Aussie dollar, and what I see here so far is clearly we've got this wedge forming. We've got some very strong bullish MACD divergence, but we had the 4-hour 50 MA causing you to give you resistance here. So what we look for now is we're waiting for a break above the 4-hour 50 MA, above this downward sloping trend line. That for me will be the confirmation that we're breaking out. And if you're a breakout trader, you can take the trade. And if you wait for the break and retest, the retest of the 4-hour 50 in this area here in general, you can wait for that as well during Monday's and Tuesday's session. So that to me highlights a good trading opportunity. Now on pound yen, I said last week I wasn't particularly interested, purely because this downward sloping trend line would have caused us aggravation. And you can see here as well, you got a couple of high tests there. It wasn't very clear at all. We did come down, put a nice little low test in here, testing the little zone between 144 and 144.5, and today had a huge bullish engulfing candle. But notice how it's now stopped at this downward sloping trend line. Now for this to turn bullish, you're going to need the weekly chart behind you, and my problem with the weekly chart at the moment is that we have this upward sloping trend line being tested 1, 2, 3 times, and had a break and retest on the daily chart with this weekly 50 MA here. So for you to turn bullish, you have to break this trend line. Now what I've done to go back to the day, that trend line is this key level here. So for me to turn bullish on this chart for a more medium to long term outlook, you definitely have to break this upward sloping trend line. And then by the time you break that, you got 152 in the way as well. So it's going to be very hard for this to turn bullish. There's lots of things to get overcome before it does turn bullish. And for the moment, like I said last week, I'm not particularly happy. I don't think it's the best trade this week whatsoever, and I'd much rather take other yen pairs or other pound pairs to express my view. Now, last pair in the week is going to be euro dollar, and I did say I thought it was a good trade last week. Depending where you put your stop, depends if you got stopped out or not. As you can see here, we did have a little mini double bottom last week, but we broke back down again, put a third touch in, and a nice bullish engulfing candle to the upside again. So now we've got a triple bottom there, which is nice to see. And when we come down to the weekly chart, you can see that this 1.58 area has given us multiple rejections now. And if you now pop up to the monthly perspective, just to give you a little view of the monthly chart, you have a doji on the monthly chart as well now. So that says to me that next month we should really see the test of 1.2. I can't really see a reason why we wouldn't now. Bear in mind, you've got a lot of trade wars with America at the moment, and initially that will just look bad. No matter if it's bad or good, it will look bad to start with. It will weaken the dollar as it needs to weaken. Anyway, that's your fundamental data that could do that, and we should see a move up to 1.2. I don't think the weekly 50 EMA is going to cause too much problems. It didn't really do a break and retest here. It's chopped through here. It broke down, come up and test the weekly 50 EMA here, but then come back up again, then broke down. So this is your test here back in 2015. Previous to that, it's always really been chopped through. So to be honest with you, I can really see this just moving back up again to 1.2 because the weekly 50 EMA isn't really a problem for me in my eyes. The problem you could say is, again, the daily 50 EMA recently has done that, but then we have seen it go through in the past as well. So just keep on the side of caution. I mean, if you are a short-term trader, 1.175, 1.8 area, that's a good target to reach. If you have your weekly or monthly perspective, definitely 1.2 would be what I'm looking at. Now, when you come down to the the 4-hour chart on euro dollar, you can see straight away that we had this move up, then drop down, chop around, move back up, then drop down again. We got huge bullish MACD divergence from over the place from this area to this one here. I'll just draw it in for you there. There's your MACD divergence there. Sorry about this, guys. And you can see it's an upward sloping trend line, no problem. So you got some MACD divergence there. The key levels, obviously, I'm going to pop this in now so you can see it. That's your key level there, 1.15. Nice level, 1.155. Sorry, just tap that in. So you see it's nice and key. And obviously we'll break up nicely. The 4-hour 50 EMA is nothing to worry about now, purely because it's been chopped around so many times. If you want to make it the hardest possible way, you could say that's what I'm looking for, that break of that trend line there as such. I personally don't believe that would be what you're looking for. It'd be something like this. It could be something that's the outset, the worst possible scenario. So you still have room and scope up to at least 1.75, which, ironically enough, coincides with where the daily 50 EMA is. So yes, daily 50 EMA will be your first target for short-term traders. For long-term traders, 1.2 would also be a good trade as well. And sometimes you mix it up, you know, it depends how your style of trading is. Okay guys, I hope you had a fantastic week, and I will speak to you soon. Take care.